Hello traders, how are you doing? Today is Friday, July the 8th, 2016. Well, this is my webinar podcast update for today's webinar deliveries. As I commented, I was willing to make a quick update today after NFP payroll number, after having discarded the complete price action after the delivery of that data. And well, here are my first impressions about that. Firstly, I would like to analyze the NFP payroll numbers. You have already realized we had a outstanding number on the jobs market in the United States, dissipating the fears of that maybe the labor market was not doing and performing correctly, as the latest FOMC meeting minutes showed that the most part of the participants there were not sure enough that maybe the labor market was recovering convincingly. Besides having the Brexit, the thing, uncertainty at that time to happen or not. But well, apparently now this number dissipates completely the doubts that you could have on the labor market in the United States. It's the American economy is recovering convincingly, and every data that you receive there is confirming that. So, as I commented in my webinar deliveries, what we should expect, or what I said should be expected, is that the market should wait for the next FOMC meetings to realize how the people that belong to that group consider this number, because from the latest FOMC meetings, maybe the markets are not really convinced of what will be the perception of this data by the FOMC. And well, it depends on how you look at it, because we have some tricky ways to analyze this according to what I've been delivering in the webinars. First of all, I said that we needed to see how the price reacted. Secondly, I said that for a trade that I had open on the Canadian dollar, only a very outstanding number of the non-farm payroll number could have cost the price not to continue falling down as I expected. So let's go part by part. First of all, I've been delivering in the webinars a potential bullish setup that I was not recommending to take, because it was way riskier. If you go to the cable charts after non-farm payroll number, what you realize is that you had a lot of volatility, but after having the volatility, the price went down and then stabilized there. And if you go into the 1 hour charts in the cable, you will see that after non-farm payroll number, the price action in the cable is pretty much range bound, not reflecting what should be expected. That means if you really had an outstanding number on the non-farm payroll number, you should have had a very severe drop on the pound. In any case, that the markets were willing to listen to the information accurately. So we can read this price action on the cable in two ways. Maybe the market has just decided to ignore this good non-farm payroll number instead, because if not, the price should have dropped, favoring the dollar. So the range-bound price action on cable could indicate that maybe the Brexit is still ruling the markets, but actually it is not. And I'm going to tell you why in some minutes. Well, actually now, if you go to the short trade that we have open, the United States dollar, Canadian dollar, actually you can see in the same hourly charts how the price reacted to the upside. Actually, it almost touched the stop loss at 1.31 that I had on that trade. It barely touched the 1.3080. Sorry about the sirens, but this is recorded live, and those dogs barking. That's go beyond my reach. So sorry for that. But well, if you go to the 1 hour chart in the Canadian dollar, United States Canadian dollar, you will see that after non-farm payroll number, actually the trade reacted in the way that should have reacted in the pound versus the dollar. But we have a tricky thing. We also had at that very time, same time that we had the non-farm payroll number, we had important data and employment change by Canada. That it was a little bit less than expected. The same number that 1 month ago made me open a short trade here in this United States dollar versus Canadian dollar. So we have like several pieces of information to analyze to see if in fact the non-farm payroll number is or is not being considered. For what you see in the hourly charts in the cable, the non-farm payroll number was ignored. Think that it's a good thing, because even having that good number, that didn't cause a sell-off in the pound. That means that actually this multi-decade support is working perfectly well. The second thing that it could mean is that in fact the markets will wait for the next FOMC meetings to see and to know the formal reaction by the currency policy people in the United States, how they actually read this number. But as you can see in the United States dollar, Canadian dollar, the markets did in fact react in the accurate way according to the number, non-farm payroll number. Why? The deviation less than expected by the labor market in the Canadian economy was not that big. So it doesn't justify maybe the movement to the upside that we had there. We had the non-farm payroll number being well above expectations, and that could help us understand that volatility to the upside. Even though we cannot say that formally the psychological 1.3 level has been broken, but the idea is this: we have objective data now that the markets really wanted to consider other economic data besides Brexit. The markets feel ready to start doing that, because if not, the markets should have simply ignored all this and would have simply considered that psychological level as valid, and maybe try to retrace it a little bit to make it fall a little bit more. But well, it's a very relative and complex thing. I know that maybe I'm not explaining myself correctly, because these are like ideas jumping in my head that they are really hard to explain in real time. I'm going to try to synthesize all this. The pound dollar should have had a sell-off today, but it didn't, because having this good number by the United States economy should have helped this to sell off. But there are two possible reasons the cable didn't sell off today. First, that the markets will wait until the FOMC change of speech in 3 weeks, thing that I don't really consider is going to happen, because it's way too much time. I mean, the number is safe and sound, is soundly healthy. So you really don't need the translation of the FOMC of what this number means. The markets already know that with this number, the probabilities of having at least one rate hike in the next month are really huge. So we don't need the FOMC to translate to us what this number means. But then again, if the cable didn't sold off today, is because we should have very important reasons for not having that being sold off. Let's remember that cable and the pound is the most fragile asset now, and is where you could see the fear being much more visible. And in such a case that a pound was not that big business or was a fearful factor, having this good US data should have caused a sell-off today. It didn't, mostly ruling out that the markets won't react to this good number, because we need a translation of the FOMC thing. That is not going to happen, because it's good enough to not being in the need of having the FOMC translate that number to us. Then it means that this multi-decade support is working and will work. If this good number didn't cause the pound to sell off, the cable to sell off today, means that this multi-decade support is just what we explained in other webinar deliveries. That this multi-decade support, it was good enough to stop the 2008 sell-off, and it's good enough to stop the cable drop after Brexit. Okay, so this increases and mostly confirms what I've been saying in the webinars, that the GBP USD and every pound cross is meant to the upside severely, because if this didn't sink the cable, then means that we have fundamental support here. Every time it passes, it gets clearer and clearer that we are getting very close to a pound recovery. Secondly, the United States dollar, Canadian dollar. I've been delivering other webinars that I have a binary option open there, more or less at 130.28, that was going to expire today. Unfortunately, by 11 pips, that trade closed in a loss. I will be, but for the ones that were following that trade in the binary option, you should have realized by now that the price that we opened that trade was so good that not even after all the volatility after Brexit, etc., it was a very significant resistance, because even the price closed very close to the opening price. We had, I commented 2 times or 3 times that there was a good chance to close the trade between 35% and 45% of the maximum profit. I recommended for the ones that decided to do so to close it, because it was a good idea. But in my case, I decided to keep it open. But for the ones that decided to play it to play it safer, you should have had between 35% 45% of the maximum profit. If you decide to go along with me up to the last minute, well, unfortunately that did expire negatively to us. But one way, and maybe one of the most important ways to really measure if you are doing an opening correctly, a binary option thing, is that actually you open it in a very important support or very important resistance, and the market will let you know that through time. In this case, what we have realized is that at the price that we opened that binary option to downside was such a good resistance level that the market barely was against us. Actually, for the ones that opened the trade in the binary option, you will see that 85% of the times we had the binary option in our favor. So it was just maybe a matter of bad luck not having this closed positively. Overall, because it was only 11 pips, more or less, out the money. But the most important thing is that actually that resistance worked, and you can see that visibly, how good it worked during 3 weeks, even resisted the Brexit. So yes, at times this happens. And again, for the ones that decide to close it and play it safer, it was maybe the wisest thing. And that's another way to measure the success of binary options. If you have the chance to close it through time, in this case, is this trade lasted 3 weeks or 4 weeks? I believe 3 weeks. And we had 3 chances to close it in profit that I explained during the webinar. So that's also how it's not that simple just to know. To know if a binary option is successful, to wait for the expiration. If you had beforehand several moments where you clearly can close the trade in profits, that means that you know what you're doing. Okay, so hopefully somebody here profited closing it beforehand, and well, for the ones that didn't, and if you open it exactly at the same price I did, this binary option was closed out of the money by 11 pips, so no big deal. The thing is that following this kind of logic, opening these trades, is the way to go. Because it's not the same thing opening a trade that from the very beginning went against us and you hold that trade negatively during 3 weeks after opening just at a price that didn't look back, than opening it this way. I mean, it's visible. You can see that the market, this resistance was good enough even to hold this good United States data, because actually this was not even good enough to break convincingly that resistance. But again, this was just a matter of 11 pips. So the next thing I would like to talk about is that maybe what it's indicating us, or well, before that, for the ones that open this trade in a margin account, in a normal Forex account, I've been saying that my stop loss was at 131. So that trade shouldn't, that stop loss shouldn't have been triggered. In any case, your stop loss was hit is because maybe the broker you're using is not fair. The Dukascopy Forex account that I use, it didn't trigger that stop loss because the market in fact only got to the 130.80. So the stop loss was not, it was away 20 pips. Again, if your broker stopped your trade, is because they are not precisely very fair and very honest, so watch out. If you had your trade closed using the 131 stop loss in the Forex broker you're using, and you would like to share your experience, feel free to drop it in the comment box, so we can also realize which brokers are still using this trustful and unfair practices of manipulating prices just to close trades when they shouldn't have been closed. Okay, so in any case, feel free to do that. And well, again, following the logic of that margin trade, that trade should be opened. I don't know what to expect to maybe this resistance to be good enough to hold a rally for the next week. What I expect is that maybe the market could retest the 130 again, but just as a precautionary thing, if you're holding a margin trade still there at the beginning of the Asian session or so, try to close it, because yes, having a good number by the American economy and not that good number by the labor market in Canada maybe would rule out the 130 as the major resistance. So that's only my 2 cents on that. And again, returning to the non-farm payroll thing, and sorry if I am like drifting in my comments, but there are a lot of things that happen in my mind now, and ideas jump here and around. So it's really hard to try to explain it as they jump in my mind. But well, the non-farm payroll number indicates something. It was not good enough to sink the cable because of most likely it's a multi-decade support, and that should be good enough to stop the bearish movements in cable. Maybe the price could stay at this zone for next week or weeks before soaring and closing that gap I have been commenting in other webinars. But we have to be ready, because I believe that what did the market and the way it handled this good US data in price action in cable is clearly indicating us that the selling spirit and the selling intentions of the pound are really low now. People are not just willing to continue selling the pound even if you are receiving convenient and good data by the United States economy. Secondly, having this big volatility in the Canadian dollar to the upside, reflecting in a way more confident proportion this big and good and healthy jobs data by the United States, may be the benchmark to indicators that yes, in fact, Brexit is, we just passed the page on Brexit, we just got over it, and the markets are ready to start doing business as usual. This means that volatility should shrink, and that from Monday on we could expect that the markets will start paying less and less attention to the UK thing and more attention to usual fundamental data. Again, as conclusion, the ones that put the expiration date for today on that trade, that short trade in the binary options broker, binary.com, if it was the very same price than me, you should have been closed at a loss if you decided not to close it beforehand in profit, as I commented 2 times and during these 3 weeks. 2 or 3 times, sorry. For the ones that still have that short trade open in the United States dollar, Canadian dollar, in the Dukascopy or any other broker account, it's a good thing that when the price retraces to the 1.30, it's a good level to close that trade, or even at the Asian opening hours, you decide. But yes, the outlook for this short trade evaporated, at least for this month. So yes, apparently the market will simply forget about the short trade and that good fundamental employment change by Canada last month, and will focus much more in the good labor market in the United States. So this could be reflected in the United States Canadian dollar as a bullish trade. I'm going to analyze maybe tomorrow the price action and to see if we can have a trading opportunity visible for the Canadian dollar to open at the very first hours of Monday. The other alternate thing that I could expect maybe to happen due to the price action today on cable is that if you remember, I recommended not trading the cable because of there was a lot of uncertainty. Overall, we needed to know how the price reacted after non-farm payroll number in cable to see exactly where we're standing on. Well, as you can see, the price action in cable indicates us that the selling spree is not there, is very weak. But this could mean that on Monday we could have a gap down to start the week. That means that I see probabilities of having the price opening on Monday more or less at 128, retesting this week's low. That could mean an excellent buying opportunity. I still need to do some price action analysis overall, because opening a trade after having a gap on Monday after a non-farm payroll number, having a Brexit so close, happen so closely, requires that I detect a convenient and acceptable and logical stop loss there. But I am planning, if I find the reasons and if a gap to the downside happens on Monday, maybe to grab it, to long it, because yes, what I expect is that the cable should rally at some point, maybe in the short term, trying to close the gap. So according to the price action after this good US data, maybe the next week is going to be that week that the pound will rally to the 1.37. But again, I need to do an analysis on the price action during the weekend, so I can, if I decide to do it, to share that trade with you with a very objective stop loss. So for the ones that are following my trades also in binary.com, yes, there could be a chance to open a bullish trade, a bullish binary option also there, but that's way more tricky because I need to find the timing. So due to the volatility lately, it's way more difficult to detect the correct timing. But yes, I will keep you updated in such a matter of those trades. I strongly suggest you to check out the description of the video. You will have there some interesting links. Overall, to my Trade Explorer in Forex Factory, where you can see more or less how it looks like now. so you can have an idea of how my performance could look like, mixing the margin trading and the binary option trading, etc., in a more realistic environment. So there you can find link. There you can find link to my Dukascopy webinars, to my binary.com webinars, to register to my next webinars, etc. So I strongly suggest you to go there. And the other one is just reminding you to subscribe to my YouTube channel. I will put my link in the description also, so you can add me there and to keep receiving the subscription updates in your YouTube account. So I believe it's everything for this. It was supposed to be a brief update, but as you can see, I am kind of very excited explaining all this, because a lot of ideas are jumping in my head now, because this finally apparently is giving back the markets a little bit of stability, so we can come back as traders to business as always, without worrying about market panicking again and spoiling all our trades, etc. And well, the potential trading opportunities that this what happened today this data opens us a huge world of renewed trading opportunities for next week in a much more contained and acceptable way in the risk side. So well, expect me, I hope, tomorrow to start sharing my first price action analysis, to have them confirmed on Sunday, just to have the maybe some trading ideas just for the beginning of the week. So ensure yourself to like the channel, to like the video, and expect my updates tomorrow and the day after tomorrow. And I wish you all to have a great weekend. Enjoy the weekend. Go out with family, with friends, enjoy it. And Monday, the markets will be there for all of us on Monday. And remember to trade safe, be safe. See you on Monday, and bye-bye.